Hello everyone, this is Arnaud Delapierre. Today, we are going to discuss a topic that is particularly important to me. How to invest your money wisely in a startup in the year 2025. Every year, the entrepreneurial environment transforms, and with technological advances, opportunities arise at an impressive speed. However, this dynamic can also be a real headache for the investor. Should we bet on fintech, artificial intelligence, or even biotechnology? What pitfalls should be avoided and what strategies should be adopted? Throughout this video, I will share my experiences, tips, and some promising trends to help you make the right choices. Before investing, you must first understand what makes a startup strong. At the beginning of the 2000s, some hit the jackpot by identifying future gems of the digital. Others rushed headlong and faced spectacular setbacks. Today, the situation has changed, but it is still essential to research the targeted market, the proposed product, and the founding team. The ability to solve a concrete problem and agility in execution are determining factors. In 2025, fields like green energy, connected health, or cybersecurity will continue to generate a lot of interest. The first temptation when one takes an interest in startups is to dive into projects that make noise without examining the economic model. The media love to talk about record fundraisings, but do not always mention long-term viability. Before putting in €1, it is good to examine the financial health, development strategy, and profitability prospects. Also, take into account the accounting between your values and those of the company in which you are investing. Without this coherence, you quickly end up funding projects that do not match your convictions or your investment profile. A little aside before continuing. If you are looking for a practical solution to manage your positions in stock market or in crypto, by the way, take a look at the Notrade app, available on iOS and Android. It is free and offers very advanced trading signals without overwhelming you with unnecessary features. Its interface, streamlined, and real-time alerts allow you to react quickly to market changes. It's a tool that can effectively support anyone who wants to improve their stock market performance. Whether they are beginners or more experienced, test it. You will quickly see the benefit of its simplified approach. Now, let's return to investing in startups. It is useful to distinguish between two major stages: the early stage, when the project is just beginning, and the more advanced stage where the organization has already demonstrated some traction. Investing early can offer significant growth potential. That's true, but it involves more uncertainties. Betting on a more established structure sometimes allows for evaluating early results and the maturity of the targeted sector. In both cases, examining the quality of the addressed market, the solidity of the product or service, and the team's ability to adapt remains a major ingredient of the success. To take action, know that there are different ways to acquire shares in a startup. One can mention direct investment, where you buy a direct equity stake with the founder, crowdfunding through specialized platforms, or purchasing convertible bonds that later turn into shares. Each of these options has advantages and disadvantages, whether it concerns control over the strategy or liquidity. Before making a choice, ask yourself about your investment horizon and your ability to handle potentially high risk, especially in the early development stage. During a pitch, many elements can inform you about the project's reliability, the seriousness of the market study, the professional trajectory of the team, and the coherence between supply and demand are some examples. Require a quantified vision and verify that the assumptions of revenue or growth do not rely solely on overly optimistic projections. Ask questions about competitors, technical challenges, or the solidity of the marketing plan. This way, you can gauge transparency and the ability to anticipate of those who advocate the idea. Never underestimate the quality of execution in this field. Once the pitch is over, The next step is thorough verification, often called due diligence. Here, it's not about blindly trusting projections. It is advisable to analyze the financial statements over the last few quarters, check the allocation of capital, or even talk with the startup's clients to measure real satisfaction. If you had the opportunity, meet different team members to better understand their energy, synergy, or determination. It's very important. Numbers and impressive speeches are important too. But let's not forget that at the heart of a company, we primarily find people and their commitments. To stimulate strong dynamics, pay attention to the fit between the solution and the user's real needs. Sometimes we talk about product market fit. The product finds its place in a specific segment. Customer testimonials, revenue growth, or subscription recurrence are excellent indicators. When a startup manages to retain its customers without spending a fortune on advertising, it is often a good sign. Also, ensure that innovation does not rely solely on a trend, but rather fits into a sustainable logic with a concrete impact on daily life. Investing in a startup involves thinking about the exit. How long do you plan to have your money tied up? The usual scenario includes an initial public offering, an acquisition by a larger player, or the possibility of selling your shares to other shareholders. Before even investing, I think it's useful to learn about the shareholders' agreement, preemption rights, and exit clauses. These legal provisions can protect you if the leaders decide to sell the company or if an unexpected event occurs. Do not hesitate to be accompanied by an expert on this type of operation. In the year 2025, some sectors will clearly stand out. Green technologies, for example, should offer more mature solutions and attract the attention of investors aware of environmental issues. We have AI, of course, which will continue to transform various aspects of the economy, while cybersecurity will address the rise of digital threats, particularly with AI. To stay ahead, consult with industry experts, attend conferences, or follow specialized communities. An informed investor, is able to anticipate certain market movements and identify companies capable of meeting demand. Finally, keep in mind that diversification often remains a wise principle, but always keep in mind what you are diversifying into. Let's talk precisely about the allocation of capital. Betting your entire budget on a single initiative may seem tempting if you firmly believe in it. However, a more balanced approach often involves allocating varied amounts to several promising companies without putting all your eggs in one basket. This method helps cushion the impact in case of failure on a project while still having chances to make a significant gain elsewhere. The allocation will depend on your risk tolerance, financial goals, and the overall consistency, of course, of your strategy. Be aware that high returns often come with increased volatility. Beyond the financial contribution, an investor can really give a boost to the startup through their contacts, expertise, and experience. If you have time, offer your help on subjects such as business strategy, communication, or connecting with potential partners. This involvement not only strengthens the trust relationship, but it can also allow you to better track the progress of the business. In return, you will have an increased view on the use of funds and the progress of the team. A win-win partnership that increases your chances of success in the venture. Haste is often the enemy of the investor. Attractive promises or announcements may tempt you to participate, but keep a cool head. Avoid investing purely out of emotion, especially if you do not master the sector. Be wary of extravagant valuations that do not reflect economic reality. A spectacular project is not necessarily synonymous with future profitability. So take the time to do your research, to question the team, and, if possible, to obtain a second opinion. It is better to refuse an uncertain opportunity than to jump in blindly and regret it later. patience remains a major asset. To conclude, remember that each investment in a startup represents a unique story with its share of uncertainties and opportunities, of course. Stay curious, continually educate yourself, and don't hesitate to surround yourself with competent advisors to validate your choice. If you enjoyed this video, consider subscribing to the channel so you don't miss out on future content and tips. And of course, don't forget to like it if you found this content useful. Thank you for following this guide on investing in startups for 2025. I believe it will also endure in future years. I wish you all the success possible in your projects and see you very soon.